Hey guys, Brian here with Dino. As we are trying to do on a midweek basis, we wanted to give an update on what's happening with the markets. Obviously, there was a bit of a crash that happened to start the week. And as of now, at the time of this recording, we're seeing a bit of a bounce jumping back up. The question is, where do we go from here? And the reason we're starting by showing off our pro report is we touched on quite a few different things with weak hands being purged, exchange inflow, and network realized profit loss statistics, and plenty of other things that we're going to jump into today. And we'll do our best to kind of navigate through the various metrics that Santiment offers to kind of give context into where we are now, how you can use these metrics in the future, even when we're not in such a volatile position. And we'll jump right into many of the metrics that we find of interest as of late. So starting here, Dino, we're looking at the exchange inflow over the past week for Bitcoin, and we can clearly see quite a bundle of spikes that went on as the crash was happening, kind of on Sunday and Monday. And now they've kind of settled down.
So this is, as we mentioned in the report that Brian just showed, the link is going to be in the description of this video for anybody that wants to check it out. Usually when these types of market-wide corrections happen, what we like to look for is markers of maximum pain or just general sort of distress by investors and holders, because even though it is very painful in the short term, it is necessary to purge out these weak hands and shake them out during these corrections in order to have a more sustainable price recovery. So one of the sort of pain markers that we've obviously seen is this string of spikes in the exchange inflow for Bitcoin. So essentially this metric tracks the amount of Bitcoin that is moving to known exchange wallets over the last 7 days. And no surprise here, we are seeing quite a bit of an uptick in the amount of BTC moving to exchanges, but presumably to sell as the correction started, suggesting there is a sort of a conglomerate, a group of holders, of Bitcoin holders that were looking to reduce their exposure, liquidate some of their positions in order to mitigate risk because they were fearing further corrections. And I think another sort of good chart that sort of shows the same thing just from a different perspective is Bitcoin's network realized profit or loss. And here, Brian, we can actually zoom out to maybe the last 6 months or even the last year just to show where we are now and where we were previously. So for people that are unfamiliar with how this metric works, essentially what we do with network profit loss is we try to calculate the total ROI of all daily transactions on the Bitcoin network. So essentially for each unit of Bitcoin that moves on the blockchain, we take the price at which it was last moved, and we assume this was the time that it was bought, and that was its buy price. And then the next time that it moves on the blockchain, like yesterday and the day before, we take that price and we assume that this was its sell price. So the difference between those two prices for all daily transactions becomes this chart. And as a result, when you see big spikes in network profit loss, what that suggests is that the Bitcoins that are moving on the blockchain at that point in time are on average moving at a significant profit relative to the last time they moved, or the time that they were acquired, presumably. And then on the other hand, when you see these dips like we have been seeing over the last 48 hours, that suggests that on average, the units of Bitcoin that were moving on the blockchain were moving at a relative loss to the last time that they moved. So that would suggest weekend capitulation, especially because, let's be honest, it's not a whole lot of time that Bitcoin has remained above 44 to 45K levels. So the fact that at this point in time, over the last 48 hours, we have seen most of Bitcoin's transactions be at a loss, or an average at least, that would suggest that these transactions were made by holders or people that have acquired Bitcoin at prices higher than 45K, suggesting, in other words, that there's a lot of weak hands, in particular short-term holders, that are now maybe even selling at a loss, moving definitely their funds at a loss, in fears of a further downtrend. So we have seen similar dips in Bitcoin's network profit loss around several local bottoms there in May and June. And this is something that we see quite often, not just for Bitcoin, but a lot of mid and low cap coins as well. Essentially, when you see these large drops in network profit loss, that points to a weekend capitulation. And assuming there's enough buy the dip pressure on the other side of the aisle, these types of capitulations can very quickly sometimes leads to short-term recovery, or sort of suggests that there's a support for a more sustained relief pump. So again, this is another sort of indicator that we have seen quite a bit of pain by some holders, especially, it seems, short-term holders, because let's keep in mind, Brian, we can also show age consumed for Bitcoin, just to let people know that there haven't been any major spikes or renewed activity of long-term Bitcoins over the last, I don't know, even weeks, even months almost. So as you can see, age consumed is a metric that tracks the renewed activity of previously dormant coins. So when you see big spikes in age consumed, what that means is typically that a substantial amount of coins, of Bitcoins that haven't moved for a long time, are now starting to move on the blockchain. And so that would suggest that long-term holders are starting to make moves. Maybe there's some sort of a behavioral shift. Maybe they're looking to cash out. However, throughout this entire crash, there have been no signs of large age-consumed spikes, no signs of old coins or long-term holders from BTC looking to make moves. So it seems like it's mostly holders that have acquired Bitcoin at very high prices shortly, or sort of in the last couple of months, that are the ones that are making most of the moves and are sort of fleeing the market in fear, which I don't think is necessarily a bad thing for the market at all. I think, yes, it's painful in the short term, but Brian, it's often a necessary precursor to a more sustainable price recovery and sort of a relief pump in the future, right?
100%. Yeah, there's always going to need to be some sort of purge of weekends and, shorter term traders dropping out, as we're seeing on these two metrics, in order to imply that prices can move back up. We talk about a metric like MVRV that I can transition over to in just a moment, and that will always have an average of 0% because of the fact that even with prices moving up historically by ridiculous percentages, there are an equal amount of winning and losing trades going on in terms of the percent gained and lost. And with that, you'll see metrics like these really represent the capitulation of shorter term traders, selling at a loss, getting out, not wanting to lose anymore, and having the consistent winners benefit from that. So yeah, we can transition right into MVRV here.
Well, actually, maybe before we go into MVRV,
sure.
One other metric that I wanted to talk about here, while we're talking about markers of pain, let's also show liquidations in MakerDAO CDPs, especially when using wrapped ETH as collateral. So this is a metric that obviously has nothing to do or little to do with Bitcoin. If you scroll down a little bit, Brian, we will have there we go, art liquidations. It's essentially what this chart shows is the amount of wrapped ETH or other collaterals within the MakerDAO system that have been liquidated from CDPs during this latest crash. So this would be another sort of signal of investor distress and a lot of pain felt by some DeFi participants in particular. And the reason why we like to look at this chart as well is that previously, several times in the past, we're only looking at the last 6 months here, but actually if you even go further back in time, you will see a few other sort of examples of this. But in general, these types of spikes in liquidations have coincided with local bottoms for Ethereum several times this year. Well, first of all, we have seen it most recently on September 7th and September 8th. So after that first leg of this crash at the start of this month, there has been a fairly significant spike in MakerDAO liquidations or CDP liquidations. And moving back maybe even further in past to June and May, there have been several large spikes, liquidation spikes right there. So this sort of behaves similar to liquidations that you would see on the derivative markets, right? It is another sort of indicator of market distress and investor pain. So last maybe 48 to even 24 hours, there have been another sort of set of spikes in CDP liquidation, suggesting that once again, some DeFi participants are definitely feeling the burn and feeling the pain. So whether this ends up being another sort of marker of local bottom remains to be seen. But I think in general, however displeasing and unpleasant it is in the short term, I think these markers are often necessary in order for us to start breaking out again. And then with that said, I think, Brian, we can move into MVRV for Bitcoin, which has been massively impacted by this latest correction. So for people that don't know what MVRV ratio is, essentially what it tries to do is it tries to calculate the average profit or the average loss of a certain group of Bitcoin holders, right? So currently, Brian is showing here the 30-day MVRV ratio for Bitcoin. And so, Brian, maybe show us the last, I don't know, 3 or 4 years for Bitcoin's MVRV ratio. So 30-day MVRV ratio essentially tracks the average profit or the average loss of all Bitcoins that have been, of all addresses that have acquired Bitcoin in the previous 30 days, right? So what is essentially the average profit or the average loss margin of short-term holders? As you can see, currently we're at about minus 7.2% for Bitcoin's 30-day MVRV. So that suggests that on average, all addresses that have acquired Bitcoin in the previous 30 days are down 7.2% of their initial investment. So they're below break even, they're actually into the negative territory. So the way that some analysts use this metric is that the higher the MVRV ratio is, the more unclaimed profits there could be. And as a result, the more risky it could be to enter into a trade, because there are a lot of counterparties that are looking to take some of these profits and apply massive sell side pressure. So the higher the MVRV ratio is, then by proxy, the more risky it is to enter into a trade. And then the lower the MVRV ratio is, at least according to this metric, the more undervalued an asset would be. So one thing that I mentioned during in the report yesterday is that on a lower end of the spectrum, so when we go into Bitcoin's negative MVRVs, the minus 15% mark has been a pretty significant support level. So here in the 30-day MVRV, we've reached sort of numbers of about, I think, 7%. But this is the daily MVRV ratio, right, Brian? So if you look at the intraday 30-day MVRV ratio, it's actually gone to as low as like 13.5, almost minus 14%. So we were almost at that border, at that established support line of minus 15%, which happened several times in the past. Yeah, let's look at it here. You can cancel out the general the 30-day MVRV ratio. Just leave the intraday one. There we go. And also you can switch the interval to maybe 4 hours for the MVRV ratio. Instead of, I think currently it's showing the daily or 7-day interval. Yeah, it's the 7-day one. So if we take maybe 4 hours, we will be able to see a bit more high res exactly what was happening. All right, there we go. So yeah, as you can see, we actually went down to about minus 14% there, right, Brian? At one point during this crash, I think it was yesterday evening. Yeah, just there. There we go. So about minus 14%. Now we've obviously, with this short-term recovery, we've bounced back to about minus 9%. But this is, as you can see, several times in the past, this minus 15% has been a fairly established support level. So it's good to see that for now, Bitcoin was able to bounce back off of that level and already move back into sort of a mini relief pump here. The question obviously still remains whether we can go lower. So the 30-day MVRV ratio currently is, I think, in quite a healthy position. Minus 9% is pretty good. I think, like I said, the lower the MVRV ratio is, the more opportune time it can be to accumulate according to this metric, right? So the fact that we are now so far away from historical highs, I think, is a healthy sign. So just to give you some idea of where we were these past couple of weeks, I think last week when I wrote the weekly report, the 30-day MVRV ratio was at about minus 4.8%. And then 2 weeks ago, it was actually plus 8.2%. So then we were already in quite or relatively high profits, right? So people were already starting probably to take some of those off the table. Currently, a lot of people are underwater, so there's going to be less sell side pressure moving forward. And I think this is definitely a more healthy environment to have Bitcoin in than to have it hover around those plus 15 and plus 20% levels, which historically have been very dangerous. So that's from a short-term MVRV ratio perspective. And then, Brian, we can also shortly show where the long-term Bitcoin holders are in terms of their average profits. I think they're currently at about, okay, it says they're plus 6%, right? Yeah, so they've, at one point in time, they've dipped to almost 0%, so around break even. As you can see, we're still far from historical lows. So long-term Bitcoin holders are currently just about +5, +6% up on their initial investment, which I don't think is necessarily, I don't think it's appetizing to them enough to start taking profits at these levels. Historically speaking, as you can see, they have waited for quite some time, especially when we look at bull cycle peaks. They've waited until their profits were on average +100, +120% before there were like massive sell-offs. So another sort of sign that we are a bit more healthier today than we were a couple of weeks ago and we were a couple of months ago. So yes, all of this is quite painful for people that are already in the market, but I think the fact that we are seeing some signs of pain and weak hands panicking is a good thing for the market in the future, Brian.
I agree. Yeah, to go back to MVRV 30-day, we're definitely in a position, as Dino said, that looks better than usual, right? When we are under 0%, regardless of the time frame, it means that there is less risk historically of opening a position based on the fact that other traders in that time frame are underwater. Obviously, they are well underwater on the MVRV 30-day scale. They weren't in extremes, but they were in semi-good territory. MVRV 365-day, this can essentially be considered neutral, neither positive or negative, really. In terms of just how extreme these percentages can get on the long-term scale. So overall, in terms of what other traders' results have been and what kind of future positioning of the markets can result from this, it looks like we're in a slightly better than average position based on the 30-day being fairly good and the 365-day being pretty much dead even.
Yeah, it's just a sort of a necessary purge. So all of these, I think the fact that these pain markers exist, in my opinion, it's a good sign for the recovery. However, it's not the full story. So we wrote about back yesterday when I wrote our weekly report, we wrote about the fact that even though there's a lot of holders obviously feeling the pain, there's still quite a few indicators that would suggest that the retail crowd in particular is still bullish on average towards Bitcoin. And historically speaking, that's not a great sign for not just Bitcoin, but for any cryptocurrency when you see these massive spikes in bullish sentiment. So the first chart that we can talk about, Brian, is this one that you have here. I think you have it live as well. There we go. So let's look at the last year of data for this chart in particular to show people where we are right now and where we were maybe back in May and back in June. So what Brian is showing right here is the amount of mentions of buy and dip together, like in a single message on crypto social media over the last year as soon as it loads. So this is based on data that we collect from over 1,500 different crypto related social media channels. So we track Telegram chatter, Reddit chatter, Twitter, essentially any type of discussions or any type of platforms where the main discussions are revolving around cryptocurrencies, we try to listen in. So what we're seeing here is based on text data from all of those different channels, we are looking at the amount of mentions of buy the dip within cryptocurrency, within the crypto community over the last basically a year. So no surprise there. We have seen a massive spike in buy the dip mentions over the last 24 to 48 hours. Essentially, as the correction started and as it intensified, the amount of mentions of buy the dip have also intensified. So in my mind, this is not a great sign, or it might be a sign that the bottom is not completely in yet. So I wrote about this when the September 7th crash happened. So a couple of weeks ago, when we had that first leg of the crash, we wrote a weekly report and we said, look, there's this spike in buy the dip mentions. And I said, if you notice, when you go back in time, these spikes in buy the dip calls have often come early, like in April and May. They start very early and then they tend to be accompanied by another leg or not even two legs down before the crowd is finally proven right. Essentially, historically speaking, the crowd has frequently been early on their bullish calls. So this latest spike suggests that there's still a lot of market euphoria. There's still a lot of people that are thinking that this crash is a good opportunity to get back into the market, to maybe, if they've missed the first leg of this rally, this is a good opportunity to move back in. And historically speaking, these spikes in buy the dip mentions have been wrong. In general, it just shows that the crowd is still a bit too overhyped. The market is still a bit too greedy. So we might be looking into sort of further corrections or some period of consolidation before all hopes and dreams of the retail investor are broken and we can start to recover. So that's one potentially concerning indicator. And it's also supported, I think, Brian, by the weighted sentiment of Bitcoin, right? So we have this metric which tries to calculate the average mood of Bitcoin related mentions on all of these channels that we collect, from all of these channels that we collect. And currently, that average mood is still in the positive. In fact, it has grown more and more positive as the crash intensified, which is definitely interesting. And it obviously sort of goes hand in hand with the previous chart. So as Bitcoin crashed to almost 40.5K, the average mood on crypto social media was positive. It was buy the dip. It was, this is a great time to get into the market, accumulate a bit more, stuff like that. So historically speaking, and we can see actually, Brian, a good example of this is what happened during the May correction, right? So when the May correction started, the first part of that May correction was when Elon Musk said that Tesla will no longer accept Bitcoin. There was a massive spike in bullish sentiment. There was also a massive spike in buy the dip calls. A lot of people thought that this was going to be a short-term correction. It was a news-driven correction, which I think a lot of people believe about this crash as well, that it was mostly sort of prompted by macroeconomic trends and Evergrande, right, defaulting. So the fact that we have then seen this massive spike in social sentiment was also a worrying sign. It was also a sign that there's quite a bit of greed in the market that might not go unpunished. And then it wasn't until we went deeply into bearish territory, all the way sort of down to late July, that we were able to recover, right? So the fact, obviously, currently, what's good about Bitcoin sentiment is that we're nowhere near as high. So the average sentiment is sort of, relatively bullish, but it's nowhere near the levels that we were at during the May correction. But it's still a slightly concerning indicator. It still suggests that there's a fair bit of market euphoria, especially in the retail sector, which historically speaking has not been unpunished often. Brian, that's I think would be fair to say. Oh, you're muted. Sorry.
Better now?
Yeah.
Okay, perfect. Yeah, I was going to say the retail crowd is often right in the short term, but wrong in the long term. Going back to the buy the dip and buy the dips mentions here over the past year, we can see that these big spikes, this one, for example, here, they'll call for a dip buy. As the price is falling, you'll get a very short-term relief followed by a longer dip down until the dip buy hype kind of dies away. And then as soon as it dies away, that's when the recovery happens, right? So oftentimes the crowd, as we see on both this chart and this chart, will be able to will the price in the direction they want it to for the immediate future. But after a week or two or three, it generally goes against what the crowd was expecting. And we can see very often when we have these big spikes here, we'll get a very mild recovery followed by further downside. And when it's really negative, that's when, it may go down a little bit more after this chunk of negativity, followed by eventually it going the complete opposite direction of what this very bearish crowd was expecting back here in mid-July. So I really advise our pro members or the people just discovering our platform to check out these kind of social trends and how the crowd is perceiving the markets at any given moment, because you may see the crowd get their wish for a few days, followed by a lot of pain for the following weeks and months.
So One last thing to talk about when we talk about these bullish markers like Brian is showing right now. There are also a few on-chain markers of bullish bias that we might want to just touch upon. So the one that I wrote about yesterday is the amount of new debt created in the MakerDAO CDPs, essentially the amount of new DAI minted by MakerDAO CDP. So if you go a few charts above that one, Brian, that's that repaid, that's debt created. Yeah, so you can see a few very big spikes. Basically, the amount of new debt created in MakerDAO has soared to its highest level this year by far. So this could also point to a little bit of increased risk on risk off behavior. So investors are looking to move back into the market by leveraging this debt and to go long on a lot of crypto blue chips. It's not the first time that we have seen these types of spikes coincide with sort of increased market euphoria and in general a propensity of market participants to go a little bit of risk off. So it's another sign that investors, holders, retail crowd are still quite bullish, and there is a propensity to buy the dip. Historically speaking, not a great sign in the short term. So what I would say is that even though there are a few sort of markers of pain, the fact that the social sentiment remains bullish and there are some markers of continuous sort of bullish euphoria on chain as well would keep me a little bit cautious for the time being. So what I would do is in the short term, I would keep an eye on social metrics for Bitcoin in particular. So social sentiment, mentions of buy the dip, social volume for Bitcoin, social dominance for Bitcoin, all of the metrics that we have on our platform that will tell you what the crowd is thinking about and where the crowd is headed right now. Currently, it's still a bit too heated. The crowd is still a little bit too excited about this correction. I would like to see them lose their hopes, for lack of a better term, before proclaiming that we have a way forward to a sustainable recovery, Brian.
I agree. Yeah, I don't have much to add on the MCD debt created, but clearly we're seeing spikes that we haven't seen in quite some time here, going back beyond just April. It's very rare for us to see, the debt created at these levels, and it's clearly a sign of some serious volatility, not only happening now, but probably upcoming for the at least immediate future.
So I think that's where we stand right now. Obviously, it's not a clear-cut case. I think there are cases to be made both for bears and the bulls. Generally speaking, these are the indicators that I would keep an eye on. For more info on all of these and a few other metrics that I talked about, make sure to check out the weekly report that will be in the description of this video. So you'll find links to all of these charts, so you can keep track of them as we move forward. In case of further consolidation or further correction, we can see whether there are additional signs of market hurt and market pain, and also what the crowd is thinking about at any given moment and how that's going to impact the future performance of not just Bitcoin but the entire crypto market. So I think that's going to do it for us today, Brian, and we'll be back on Friday, right?
You betcha. Yeah, looking forward to talking to you all in a couple days here, and I hope you enjoyed the video. In the meantime, feel free to give it a like and subscribe. It always helps our ability to create more videos and market updates just like this.
Thanks for sticking by, guys, and we'll talk to you in a couple of days. Stay safe out there. It's a volatile time.
Take care, guys.